Facebook considers building NFT features alongside digital wallet. By Kurt Wagner. Facebook Inc. is considering building products and features related to non-fungible tokens, or NFTs, the digital assets that have taken off with the rise of blockchain technology. We're definitely looking at the number of ways to get involved in the space because we think we're in a really good position to do so, Facebook executive David Marcus said Tuesday in an interview on Bloomberg Television. Did you know? In IT parlance, taxation on cryptocurrencies should depend on the nature of investment, whether it is held in the form of currency or in the form of assets. Know the tax implications of investing in cryptos. Facebook's digital wallet is ready now, Marcus said, but the company has been waiting to launch it until it can do so alongside Diem, the digital currency previously known as Libra, which Marcus co-founded from within Facebook in 2019. Plans are for Diem to offer a so-called stablecoin backed by the US dollar, but it's unclear when the coin will be introduced. The project faced immense pushback from lawmakers and regulators when it was unveiled, and while Facebook is still a partner on the project, Diem is now run independently. Marcus said Facebook would consider launching the Novi wallet without Diem, as a last resort, but he believes both are necessary to change the way people make payments. The social media giant's hope is that people will use Facebook's wallet to transfer Diem, which could reduce costly fees and lower the time it takes to send money cross-border. Without more innovation in payments technology, Marcus said, countries in the West like the US will struggle to keep up with China in adapting to a world where digital payments are dominant. We're really falling behind at an alarming rate, he said. Lenders offer green deposits to tap ESG sentiment in India. Mumbai. As ESG financing gains traction across the world, some financiers in India are offering so-called green deposits to customers promising to use the funds raised through this channel to bankroll environment-friendly projects. Last week, Housing Development Finance Corp. HDFC, India's largest private sector mortgage financier, announced the launch of a new green deposit plan to attract environmentally conscious depositors. HDFC is likely. FPIs favor cement stocks on better volume visibility. ET Intelligence Group. Cement stocks are emerging as a preferred bet for foreign portfolio investors, FPIs, following improving volume visibility and price discipline by cement companies. The value of their cement portfolio increased by 46% in the year-to-date YTD period. It outpaced their other portfolios including automobiles, consumer durable and household products. This also raised their allocation to the construction materials. India Inc. faces a margin squeeze. Mumbai. Corporate India is out of the woods, its top line is rather cheerful, but profits are beginning to get squeezed on higher input prices. At the margins, therefore, the downtick is material enough to revisit aggregate costs on materials. Take Bajaj Auto, for instance. The Pune-based auto major expects cost inflation of 3% in the September quarter, of which 2% is expected to be offset through price increases. Maruti Suzuki, India's HDFC Bank pays a little extra for overseas AT1 bonds. Mumbai. HDFC Bank, India's most valued lender, has paid slightly more on selling additional Tier 1 AT1 bonds offshore than at home. It recently raised $1 billion via perpetual bond sales overseas, the largest by any local bank. The fundraising is still cheaper than selling equity and has diminished the need for immediate equity capital infusion. HDFC Bank is the only large Indian bank that has not raised equity capital since the beginning of the last financial year. Possibly, it is slightly higher than what we would have been able to raise domestically, said Ashish Parthasarathi, treasurer at HDFC Bank, in an interaction with ET. If you have enough AT1 capital, it reduces the need of raising equity capital, he said. The bank raised those bonds offshore as a part of the capital planning process while broadening the investor base. If you compare AT1 cost with the cost of equity, from that perspective AT1 is much cheaper, said the treasurer. While the bank sold dollar bonds, it will be using a rupee-denominated book for the proceeds. It will have to hedge at some point in time covering the foreign exchange risk. The cost of covering adds to the funding cost. You have to balance it between the need of the future and market availability, Parthasarathi said. The bank, which is readying itself for future growth, appears ready to bear any small additional cost for diversification. Diversifying the investor base has a cost to pay, Parthasarathi said. The treasurer declined to disclose the total cost after covering the currency risk. Due to high demand, the pricing of those bonds was tightened to 3.70% from the initially offered 4.125%. Bonds have a 5-year call option. Global investors will look for how capable the bank is of calling the issue after 5 years, said Parthasarathi. Additional Tier 1 bonds are billed as quasi-equity securities that bear a higher risk of capital losses. Those are generally rated 2 to 4 notches lower than an issuer's corporate credit rating. Global rating company Moody's rated them as Ba3, 3 notches below the deposit ratings. The bank's capital adequacy ratio is 19.1 in the June quarter. The CET1 common equity is at 17.2%, much above the threshold of 6.125%. A borrower is also barred from paying a coupon on those bonds if it incurs losses in a financial year. There is a gap of almost 11% for the capital to fall before investors feel it is risky, said the treasurer. The timing is right as there is so much liquidity in the market. The yields are low. The AT1 bond sale received about $4.25 billion worth of bids, with global investors like GIC Singapore, BlackRock, Fidelity Investment, HSBC Global Asset Management, JP Morgan Asset Management, Lombard Odier and Value Partners rushing to buy the papers, 3 market sources told ET on August 16. Patchy Indian monsoon set to cheer palm traders 3,000 miles away. Faltering monsoon rains in India are posing a risk to domestic soybean and peanut crops, and may prompt the world's biggest palm oil importer to boost purchases from top growers Indonesia and Malaysia. The world's second most populous nation, where eating fried food is a national tradition, depends on overseas suppliers for as much as 70% of its edible oil needs. Concerns are growing that deficient monsoon rains this year could hurt crops, raise food prices, threaten a nascent economic recovery and boost imports of farm goods. Inbound shipments of palm oil will be higher in the year starting on November 1 than an estimated 8 million tons in 2020-21, said G.G. Patel, a veteran trader and managing partner of GGN Research. He didn't provide an estimate for the next year. India mainly imports palm oil from Indonesia and Malaysia, which are about 2,400 miles and 3,000 miles away respectively from New Delhi. Deficient showers in the western state of Gujarat, India's biggest peanut grower, and erratic showers in Madhya Pradesh, the nation's #1 producer of soybeans, are likely to hit oilseed crops, said Patel, who has been trading edible oils for more than 5 decades. Poor rains in the northern Rajasthan state will potentially curtail prospects for winter-sown mustard crop as well due to a reduction in soil moisture, he said. Private weather forecaster Skymet Weather Services Private said Monday that India is likely to miss a normal monsoon forecast due to patchy rains in July and August and an unfavorable weather pattern. According to the India Meteorological Department, the nation's Weather Bureau, cumulative rainfall in the June-September rainy season so far has been 9% below normal. Soybean production in 2021-22 will be lower than the estimated 9.2 million tons for the previous year, while peanut output may drop from 5.4 million tons, he said. According to the Farm Ministry, total area under monsoon sown oilseeds was 18.8 million hectares, 46.5 million acres, as of August 20, compared with 19 million hectares a year earlier. Sowing of some crops will continue until the end of this month, it said. Showers in Gujarat have been 47% lower than average so far, the Weather Office said. Weaker monsoon conditions will continue to prevail over several parts of the country during the next 4 to 5 days. Labor Ministry to unveil eShram portal on August 26. The Labor Ministry will launch the National Database for Unorganized Workers (NDUW) or eShram portal on August 26, bringing millions of unorganized workers in the country on a common platform. It is estimated that 92% of India's workforce of 500 million is unorganized, often deprived of minimum wages and any form of social security. This will be a single-point reference to help authorities reach out to and track workers in the informal sector, and offer welfare in times of crisis. Labor Minister Bhupinder Yadav on Tuesday reached out to all trade unions to mobilize support and awareness about the portal among workers. The database will include construction workers, migrant workers, gig and platform workers, street vendors, domestic workers, agriculture workers, migrant workers, and similar other subgroups of unorganized workers. The eShram portal will be available in public for open access where workers can self-enroll through Aadhaar and mobile number.